please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's go straight to Dalal Street now. The sell-off is intensifying as most indices ended in the red with some sharp cuts today. The Nifty closing at its lowest point in 2018, breaching the 10,250 mark. This was the fifth session of negative ending for the March series. The Sensex also ended with cuts of more than 425 points. Mid-caps managed to hold on to the 19,000 mark. Banks led the decline. Anuj joins us now to wrap up today's trading action. Anuj, what led to the sudden fall today?
Well, what a bad day for the market today. The fresh 2018 lows are here now for most indices, for the Nifty as well. The Bank Nifty is convincingly below the 200-day moving average. Advance decline started at 7:1 in favor of advances, ended at 1:5 in favor of declines. And most sectoral indices, even the IT index was not spared. What's wrong with this market? Essentially, our market is falling under our own weight. The US markets were up. Hang Seng was up 600 points today. The fear factor has taken over the Indian market. On every rally, the market is being sold into, and today that gap up was sold into. Banking in particular is seeing panic selling now, and the fear now is that is the problem moving on from PNB to the larger private banks? That will then become a systemic issue. So stocks like ICICI and Axis were down today. FIs have been selling on all levels, and the DI buying support has also been waning a bit over the last 3 or 4 days. No point talking to too many stocks, but if you want to take a look at the big ones, the big banks were down, of course. Mahindra & Mahindra, TCS, Maruti, Tata Motors, all of them were down. And in the F&O space, stocks like Adani Enterprises, Balrampur Chini, BEML, the PSU banks like Indian Bank, they were all down. Right now, as I said, it's a bit of a fear factor playing out. The markets are trading at fresh 2018 lows, and our markets are now underperforming global markets by a distance.
All right, so 2018 lows for our markets. Anuj, thanks very much for that. Joining us now to take that conversation forward, Gautam Shah, Associate Director of JM Financial, and Ajay Srivastava, the CEO of Dimensions Corporate Finance Services. Ajay, let me start by asking you, we just heard Anuj there talking about how our market is now decoupled from what's happening in the global markets, which continue to move forward. We seem to be weighed down by domestic factors, by local factors. What's causing the fear?
I think, Shereen, one thing is very clear, that what we had apprehended is coming true. The credit market is heading into a major gridlock. The PSU banks, which are the biggest suppliers of credit to the MSME sectors, to the export sectors, have almost clamped down 100% on any disbursement. You talk to anybody, they're saying documentation has become 200% and there's no money coming through. When you appreciate, when you look at a credit gridlock, it is going to roll into other banks as well, because the suppliers will not be able to pay their loans and the people can't pay the EMIs. And it's going to, the cascading effect is what's bothering the market to say that the knee-jerk response to this whole crisis which has come around, which is arresting bank officials and everything. Where do you think bank officials are going to do? They're not going to give you any money. If they don't give money, the credit gridlock is going to hamper the economy in a big way. So at this point of time, sheer factor that credit gridlock is going to impact us in a big way. And the number two is RBI in a position to categorically say that two other private banks, which is Axis and ICICI, are they kosher? Axis Bank chairman just got fined today for wrong declaration of NPAs. Now, these two banks had a checkered history. So if you sum total PSU banks and two of the largest private banks, you're talking of a full-blown crisis. And in a crisis, you do one thing. You lock in your profits and you sell.
Okay, Gautam, would you agree with what you just heard there from Ajay, that this possibility of a credit freeze or a credit gridlock that Ajay was talking about, that's going to now have implications not just for the banking space, but for the larger economy, where one was hoping that we would actually see a revival as far as the investment cycle was concerned. That is now going to go awry. Is that what you fear as well? And is that what the market is now factoring in?
Well, I guess so. And I think it's quite worrisome, because 2017 was a year wherein the buy on dip strategy worked wonderfully. And suddenly in the last 6 weeks, you've had a stance wherein the market is being sold on rallies. So clearly the trend texture has changed, and it's almost as if the market has to deal with a relay of bad news. It started off with the budget announcement, then the PNB episode, the US market performance, the fact that bond yields globally have hardened quite a bit, and now the trade war fears. So all of these factors, I think, will affect the markets, at least from a near-term perspective. And I think this market requires a little more price and time consolidation. So another 4-5% on the downside is something that one has to work with. And more than anything else, the market needs to stabilize at a particular level. And the U.S. market setup is not helping because, we are of the opinion that the U.S. markets could actually be in for much more downside from these levels. So, if that plays out, then India will definitely be impacted.
Okay, Ajay, would you agree with what Gautam just said, that we could expect another 4 to 5% downside move from the current levels?
I think it just depends. Shereen, I am not so pessimistic. I think it just depends the way the government responds to this crisis. I think if there is a clear move by RBI to kind of isolate this problem, see that the credit system starts to flow through very quickly in the economy, reassures that lots of money coming into the system, I think you can retrieve the situation. Because the good part is that Indian economy, by and large, 60% of the heavyweights do not have too much of debt to carry. So I think to that extent, if you've got a portfolio built up of those stocks, I think you can weather this storm. The worry is that the lightweights are going to get blown in the storm. So 4 to 5% is what? It's 400 points on the Nifty, really speaking, which could happen any day. But I would still say that the large caps, I think, should be now stabilizing anytime soon. And there is where the sanctuary is going to be for the next 8 to 12 months. And remember, this is not about just the banking crisis. Also, we are now in the next quarter, we'll start looking at the political ramification next election. So new money commitment, I think, will be a big issue in the next 3 months. That who are the new buyers? All of us went into this market over-invested, Shereen, and now we are not finding enough liquidity to buy the bargains, quote-unquote bargains. That's a big problem. And next quarter, what I see is there'll be not enough people willing to commit capital with the government heading into the elections. So I think it's all about, I think, next quarter, and this whole redressal of the present situation is going to be what steps the government and RBI take to address the credit thing. Number 2, liquidity. Will the mutual fund also now continue to sell? They sold yesterday. Will they sell? I don't know the numbers today. But if they start selling, then you can't hold this market.
Gautam, I'll end by asking you that question, the point that was raised there by Ajay on liquidity, because FII selling, as Anuj was pointing out, has only accentuated, and so far we've seen DII supporting our market. But given the factors that we now have to contend with, is that going to be a concern as well, the lack of DII support?
Oh, I think so, Shereen. And I think if you actually look at the F&O data, what you'll notice is that the FIs have more shorts than longs in the system right now. This is something that we've not seen in a very, very long time. And the kind of figures that we see on a day-to-day basis, I think it's quite concerning. Even though 2017 was a year wherein we all spoke about domestic liquidity, but that's not helping in the current environment. And I think going forward, it's really going to be about global markets. And globally, the way the bond yields are, and given some of the political factors, I guess this market has to deal with a lot more problems before it can actually stabilize.
Okay, in fact, as we speak, at least on the banking issue, and Ajay, I'll get you to comment on this. We've just got news coming in. Axis Bank basically suggesting that their exposure to Nirav Modi as well as Gitanjali is merely 200 crores. And I think, also this issue of the summons to Chanda Kochhar and Axis Bank CEO Shikha Sharma blown a little bit out of proportion. Again, as sources are telling us that neither of them were part of the representation at the SFIO today. Representatives of both ICICI Bank and Axis Bank made presentations to the SFIO, answered their queries. A quick comment from you, Ajay, on that.
It doesn't matter. I think there have been too many slips in both the banks to warrant the continuation of the leadership team. And I think the investors will be reassured if there is a serious change in leadership in both the institutions, because these two are systemically important institutions for this country's banking. It doesn't matter whether they went personally or didn't go personally. To get fined for wrong statement of NPAs on top of what happened in the last audit report, on top of all the problems the bank had, I think the bank directors need to be accountable to ensure the leadership changes, new clean leadership comes in, and people and investors are reassured that there are no skeletons hiding inside. They didn't come up with the Nirav Modi exposure for the last 15 days till this matter was a thing. It's come up today. So any management which hides information, I think needs to go, because this is not an environment where we want wrong information, rumors, spooking the investors and depositors. You don't want that. When I said RBI decisive action means look at the leadership and say we need to change, we need to reassure people that everything is kosher on the balance sheet. Otherwise, rumor mill will take over.
Ajay, Srivastava and Gautam Shah, appreciate you joining us to take us through why our markets are falling and where we could be headed next. Thanks very much for your time here on CNBC TV18. In fact, let's head straight to that story. We are given to understand that representatives of ICICI Bank and Axis Bank appeared for questioning before the Serious Fraud Office in Mumbai today. Utkarsh Chaturvedi joins us now with the latest information. Utkarsh, so neither Chanda Kochar nor Shikha Sharma present at the SFIO office today. It was representatives of both banks that were asked questions. Take us through the details.
So, Shereen, it was in the morning only that we clarified to our viewers that it's the representatives of both the banks who have been called for questioning, and that's exactly what transpired during the day. Representatives of both Axis Bank and ICICI Bank, obviously senior managers, DMD, DMD, the V. Srinivasan of Axis Bank was present there for questioning in front of SFIO. Senior representative of ICICI Bank was there. But the whole matter was about, when it comes to the SFIO, of understanding the exposure which was there to Gitanjali Group companies and Nirav Modis Group firms. Now, speaking about Gitanjali Group, at least there's an exposure of somewhere around 5,200 crore rupees. It is being given by a consortium of somewhere around 31 banks. And this is what really SFIO is looking at. What SFIO is doing right now is understanding the case. Remember that it is only on 22nd of February that SFIO has lodged the first complaint against Nirav Modis and Mehul Choksi. So they are in the stages of really understanding the whole case, and the summons were exactly there to get all the details about the kind of interest payments which has been done in this regard, also the kind of collaterals which have been given in front of the credit facilities. So clearly, as you said earlier as well, that the news about summons was blown out of proportion. We went ahead in the afternoon, clarified to our viewers that it was more of a representatives which were asked, and exactly that's what transpired during the day.
Sure. Okay, Utkarsh, appreciate you joining us there with those details. That's not all. Nirav Modi's firm Firestar Diamond has moved the Delhi High Court against the attachment of properties by the Enforcement Directorate. The company has sought a copy of the search warrants from the Ministry of Finance and the ED and has claimed that due process was not followed during the search operation. But the big international story that is moving Wall Street. South Korea claims that North Korea is willing to hold talks with the US and is even willing to give up on its nuclear program. According to South Korea, North Korea has also said that it will suspend all nuclear tests while those talks are underway. Now, speaking to the media, the head of the delegation from South Korea said, and I quote, North Korea made clear its willingness to denuclearize the Korean peninsula and the fact there is no reason for it to have a nuclear program if military threats against the North are resolved and its regime is secure. US President Donald Trump has just responded on Twitter. He says, and I quote, possible progress being made in talks with North Korea for the first time in many years. A serious effort is being made by all parties concerned. The world is watching and waiting. Maybe false hope, but the US is ready to go hard in either direction. So that's Donald Trump there reacting to the big story coming in from North Korea. Wall Street soaring on the back of all of those developments. The Dow up by about 100 points. The S&P 500 is 0.2% higher, while the Nasdaq is trading close to 0.5% higher at this point. So the S&P now flat at the moment. But let's talk about the big CNBC TV18 exclusive. The other top story we're tracking this evening. Get ready for more changes in the Insolvency and Bankruptcy Code. CNBC TV18 learns the government will soon announce further changes to the new framework governing corporate insolvency in India. Sapna Das, who broke that story, joins us now. Sapna, what changes can we expect?
Well, this is under discussion as of now, and you are given to understand that the Insolvency Law Committee that was constituted on 16th of November is due to give its recommendations around 10th March, probably between 10 to 15 March. So once that comes in, the recommendations are going to be finalized. But the sense that has come in from the government quarters is very clear. There are unintended complications arising out of, kind of a wrong interpretation of Section 29A under the IBC, and Section 29A is the big one. Barring the promoters, the related parties, the connected persons, connected companies, so on and so forth. So it's a four-layered structure, and all of them are banned. The question here now arises is that, Can the government do something on this front, at least in terms of the related party matter? Can some kind of a cooling period be kind of given so that at some point in time these people may come in for the bidding process? That's the kind of thinking that's going on right now. But we are not very sure whether they'll actually go ahead with that or not. But this is a serious concern that has been raised by various stakeholders. So some clarification will come out, and on that front, whether it be amendment or by rules, that's something that we'll wait and watch for. The second, of course, is that even between 0 and 180 days right now for the resolution process, there will have to be proper timelines to be fixed so that the entire process becomes faster. In terms of the actual amendments that may actually come through, well, clarification for home buyers, are they operational creditors or financial creditors? This has been doing the rounds for quite some time. The government has assured as of now that they will get a fair deal, quote unquote.
Okay.
Apart from this, of course, promoters of failed SMEs, most likely they'll be allowed to bid because of the original ordinance that was moved in under Section 29A. All the promoters have been, all the willful defaulters have been banned. Those promoters who are suspected of malfeasance have been banned. But this is affecting the SME sector, so that's something that's definitely going to go in, and top government officials have given a very clear indication on that front. Last but not the least, cross-border insolvency will also be brought in. Okay. So lots of changes are there, on the cards. Probably sometime post 15 March, we'll get to hear more on this. And most likely, if there are going to be serious amendments to the IBC, then that may come in by monsoon session, because the budget session will end around 6th April. Not very sure whether the government will have that much time to move.
All right, Sapna, appreciate you joining us with those details. The other big story tonight, there is no relief for Karthi Chidambaram. The CBI Special Court today extended his custody by 3 more days. The CBI produced Karthi before the Patiala House Court and sought 9 days of an extension of his custody. Ashmit Kumar, who's been tracking that story, is with us. Ashmit, the CBI seeking a 9-day extension, getting only 3 days. Take us through what transpired.
Right, so no relief in sight as far as Karthi Chidambaram is concerned. The trial court today extending the police custody by as much as 3 days. And keep in mind that as of this afternoon, Karthi Chidambaram has already spent as many as 6 days in police custody with the CBI. Now, what's critical here is that the CBI today was seeking a further extension of police custody by as many as 9 more days. They got 3. The contention that the CBI was essentially putting forth is that over the last 4 to 5 days, Karthi Chidambaram has been evasive. They said that he's not been cooperating, that he's not coming on board as far as investigations are concerned. And that's one major grouse that they had. The second key clarification that the CBI made is that Indrani Mukherjee's statement is not the only piece of evidence that they're relying on. They said that they have one more material, substantive and concrete evidence and new material that has surfaced over the last 3 to 4 days, for which they require custodial interrogation of Karthi Chidambaram. And on both these counts, the trial court, at least for now, appears to be siding with the CBI, allowing for a 3-day extension. Karthi Chidambaram will have to appear once again in the court on the afternoon of March 9th, and that's when the trial court will decide on the bail application. For now, however, the pain continues for Karthi Chidambaram. Back to you.
All right, Ashmit, appreciate you joining us with that. Time now for another exclusive tonight. Tata Motors has responded to SEBI. SEBI had asked the company to conduct an internal probe to find out how sensitive information was leaked on WhatsApp. Ronojoy Banerjee caught up with the Tata Motors Managing Director just a short while ago. Ron, what did the Tata Motors MD have to say on the issue with SEBI, as well as some of the other contentious issues?
Well, as far as the SEBI issue is concerned, Shereen, he said that Tata Motors and SEBI, they have been in touch. Tata Motors has specifically sought some answers from SEBI as far as this probe is concerned. He said that this, in all probability pertained to a case back in 2015. This is pertaining to the third quarter numbers of the financial year 2015-2016, and that's as much as as Gunter Bushek was willing to stay at this stage. But he did say that Tata Motors will conduct and complete the internal probe within the 3-month time period. That is what SEBI has set out. But more importantly, remember, I spoke with him. Gunter right now is in Geneva, where the Geneva Motor Show is taking place, and this motor show is taking place amidst the looming threat of a possible US-EU trade war. And we've seen Tata Motors stock also under pressure on Monday and on Tuesday. And here Gunter Bushek very categorically said that it's not just the global OEMs, but even Tata Motors could be impacted. And the big impact will be on the raw materials front, because he expects an escalation. He said there is likely to be a major impact on steel prices globally, and by virtue of that, Tata Motors is of course not insulated. He also went on to say that Tata Motors will not be affected as much as as their subsidiary Jaguar Land Rover, where remember 17-18% of Jaguar Land Rover's overall volumes come from the US, but still there will be some amount of impact on Tata Motors. As far as the U-turn on the government's part on the EV policy policy is concerned. This is the first time we have an Indian automaker on record saying that they are somewhat disappointed, and they have requested, they are hoping that there is a rethink on part of the government. Gunter Buschek maintaining that for private sector, for private companies to make the kind of bulk investments that EV mobility will require, the industry needs a clear and a crystal clear policy, and that is what Tata Motors is hoping for, because going by the initial thrust from the government on EV mobility, many companies like Tata Motors had made electric mobility central to their long-term plan. So they're hoping that sooner rather than later the government does another U-turn and perhaps comes out with a clear policy. All
right, Rhonda. We'll, of course, get you that exclusive interview with Tata Motors Managing Director from the Geneva Motor Show. That's coming up for you on India Business Hour. We'll take a break, but when we return, more breaking stories, more CNBC TV18 exclusive news on the other side. Well, telcos are creating a rhetoric rather than availing legal remedies. That's the word in from TRAI Chairman R.S. Sharma. Speaking exclusively to CNBC TV18's Ashmit Kumar, Sharma said that fixing tariffs is entirely under the telecom regulator's domain. He's, of course, reacting to comments that have come in from Airtel, Idea and Vodafone, talking about predatory pricing and the possibility of seeking legal remedy. Remember, the TD-SAT is now going to hear that matter.
Ultimately, if as a consumer you don't understand what the tariff is, you will be cheated, right? So therefore, it is keeping the consumer at the center of this entire debate. Unfortunately, we all talk of TSPs or XYZ. We don't talk of the consumer so often. The appropriate course of action for that entity should be to approach an appellate forum, which is the Honorable TD-SAT or the Honorable High Court or whatever, depending on what kind of order it is, what kind of is it regulation or it's a TTO. So therefore, I find this not really a great idea that you first criticize, make allegations, etc., etc. I mean, that's not the way things should be done.
Well, that's the TRAI chief hitting back at incumbent telecom operators, saying, don't criticize us, seek legal remedy if you don't like our order. Staying with telecom, the cabinet will take up the proposal by an interministerial group on deferring spectrum payments by telecom companies. Kritika Saxena is here now with more. So, Kritika, the IMG had submitted its recommendations on the way forward for telcos, and this was done, sometime in February. We are given to understand that the cabinet may take this up tomorrow. What can we expect?
So, Shereen, there are 4 recommendations that will be important and that have been submitted by the IMG. Remember, the Interministerial Group on Telecom had cleared, the extension of deferred payment for spectrum bought in auctions from 16 years to 10 years. That brought relief of almost 25,000 crore rupees if it does go through, and replacing PLR with the MCLR regime for delay in payment to operators. Now, the issue on spectrum cap, remember, had been transferred to the TRAI. So, the TRAI then had recommended removal of the intra-band cap of 50% on spectrum holding by operators, and they had suggested that operators be allowed to hold 35% of total spectrum assigned in a circle from the current 25%. So even the TRAI recommendation on the spectrum band had been clubbed together along with the Interministerial Group on Telecom's recommendation, and that had been submitted. So Shereen, these 4 net, we don't have the exact number, but from what I could understand from my sources, if these 4 all go through in their current form without any changes in the cabinet, relief of a minimum of 50,000 crore rupees on an annual basis is likely for the industry.
All right, Kritika, appreciate you joining us with that. Of course, we are given to understand it may be taken up by the cabinet when it meets tomorrow in the evening. With that, it's time for us to wrap up this edition of What's Hot. Don't go anywhere. The Nifty and the Sensex were battered in trade today. The market action on Markets Today talk back coming up next. I'll see you again in 30 on India Business Hour.